Good morning and welcome. Patriot News Hour. Joe and Jason on this Monday. I hope you had a fantastic weekend out there. How did your teams do? Same old here in Arizona. I'll say that. It's one of these days it's going to happen. But the weather has definitely cooled off. I know it's going to get over 100 again this week, but we're close. Fall is almost here. It's about time. It was a long, hot summer, but it is finally coming to an end. You know what's not coming to an end? The rally in gold continues. New all-time record highs. We're going to say that a lot. We're going to say that a lot over the coming years. We've got a busy week this week. Almost every Fed governor on the planet is going to talk. Matter of fact, we already had 3 this morning, but all week long, I guess they're going to try to convince us that they had to cut 50 basis points, even though everything is fine. Just ask them not to, well, everything's fine. It's fine. You know, we want to make sure it stays fine. I guess that's kind of the new mantra out of the Fed. We had some early PMI data out today. It wasn't great. And what I mean by great, well, they were a lot lower than last month. But prices paid skyrocketed to the highest levels this year. So here we go. Jason and I have been warning, we're going to start probably talking stagflation a lot more in the coming months. That's just our guess. That's kind of what it feels like. But speaking of inflation, we're going to get inflation data Thursday and Friday. So on top of all the Fed people talking, we'll get this inflation number again. I think, Jason, it's going to be a lower number, a number that'll still make them happy and convince them that it's okay to keep cutting rates. As I said, we already had 3 Fed governors out, and they all kind of said the same thing. Well, we're not declaring victory on inflation, but we're pretty close to being there, and oh, by the way, more rate cuts are coming.
They really should define what defeating inflation really is, and then see if people agree. Not too long ago in the history, before 2% was normal, right? You want zero inflation, right? Where did that go, right, Joe? That's never coming back, is it?
Never.
They're telling you to
never
accept theft. Accept theft.
And it's funny because you got to remember, people don't know this, and they don't want you to know it. They don't track inflation the way they used to track inflation. So when we talk about the comparisons of the 70s, now there's people out there, plenty of you, hey, you were alive during the 70s, and man, the headlines were a lot worse. I'm assuming, I don't know, I was, just born in 1970, so really don't remember a whole lot other than, I was running around playing sports with my brothers. I mean, that's about it, right? That's all I remember out of the 70s. But, see, they decided that being honest wasn't very good. Because, man, we got this problem with this debt money system. See, the problem is we need to continue to keep printing money. I mean, they can't ever stop. And if it does, well, it leads to bad stuff. Disaster happens. We have to do it. That's, believe it or not, that's actually how it's intended to work. Seriously, I mean, we've got thousands of years of data about it. Right? We know. Well, I don't know about thousands, but over 1,000 years of data on fiat money. We know what happens. So they decided, hey, let's do this. Let's come up with a way that will understate what the rate of inflation really is. And then we'll use the media to convince you that it's fine. Don't worry, it's not a big problem. And it's funny because right about the time the cheerleading channels came into existence, the CNBCs and the Foxes, the CNNs, they started reporting on the markets all the time. Alan Greenspan and his buddies, listen, none of them actually worked in the real world. But here's what they came up with. They said, well, we shouldn't track the price of houses. That's not right. No, or what it costs. How about what it costs to build a house or an apartment, what have you? Nah, that's no good. Let's come up with this rent equivalent thing. Well, what's that? Who cares? Right? But all as we know is, with all of our extensive research, it'll understate housing inflation. Good start. That's a good start. So they started with that. Then they said, well, it's not really fair that we just track, as an example, ground beef. Ground beef gets expensive. Hey, maybe pork won't be. So we'll just take ground beef out and we'll find, Spam, pork, chicken, anything we could find that didn't go up and say, well, they could just buy that. See? So that way inflation's not that bad. We'll be back. 800-951-0592, Patriot Radio News Hour, Joe and Jason on this Monday. A quick look at the markets. Pretty quiet so far today. The Dow is up 11, the S&P's up 9, the Nasdaq's up 35, the 10-year note 378, so continuing to rise. And again, all the debt that needs to be sold. Oil's quiet today. Gold's at another all-time record high right now, 26.30. Been as high as 26.35. We will continue to watch as this plays out. Silver's off a little bit. Be diversified here. Listen, this is going to be, I think, a very interesting what's going to happen. We got the election that's 5 weeks away. We've got the war drums. It seems like never-ending beating of the war drums. We've got government. Is the government going to shut down? Are we going to keep spending? Of course, then we have how much debt is going to have to be sold next year and the year after. Get more diversified. Check out our friends over at YRefi, up to 10.25% fixed rates of return. What does a fixed rate of return mean? It means it doesn't change. Well, what if this and what if that and blah, blah, blah. No, they don't care. Up to 10.25% fixed rate of return. You can use it as income. You can compound it. You can do whatever you want. They don't play games. They don't attack your principal. They don't do any of that stuff. Got to have a minimum of $50,000. You guys know this, but check them out. InvestYRefi.com. That's the word invest, the letter Y, REFY.com. Or just call them at 888-YRefi24. So going back to inflation, let me give you a great example. See, because this is how they look at it. If the filet gets too expensive, well, then maybe, you'll buy the porterhouse. And if that's too expensive, well, you'll buy the top sirloin. If that's too expensive, you'll buy the London broil. If that's too expensive, you'll buy the ground beef. If that's too expensive, heck, you know what? Let's check out the pork, the chicken, whatever it may be. To come up with this new, they call it the replacement. And why they're able to say inflation is so low. If you actually want to compare it, because they're telling you. Now, I'll be fair here. They had 3 Fed governors come out today. They all said the same damn thing, which is, hey, we're not ready to declare victory on inflation, but we're pretty close. Pretty close. And oh, by the way, we anticipate maybe slowing the pace of rate cuts, but if the data changes, we're fully prepared to keep going big. And it's funny because if you go to Shadow Stats, a guy named John Williams, you can actually see what the inflation rate would be right now if we use the same methodology we did in the 70s and the 80s, which is, hey, we track exactly what I said. Hey, if we're going to track ground beef and bacon and eggs and milk and housing, right, we're going to actually track it. No substituting, no rent equivalent nonsense. Healthcare, right? They make up all these excuses for healthcare. Well, here's the problem. Right now, inflation would be about 6%. And Jason, we just cut rates by 50 basis points because they're telling us everything's going to be okay. I actually think this is going to end very, very badly, mostly because these guys actually believe their own nonsense. They created this fallacy of inflation. And then, of course, like Jason said, remember, there was no such thing as 2% inflation. There wasn't. Wasn't a thing. It wasn't a thing in the 90s. It wasn't a thing in the early part of the housing boom or even the housing crash. You know where it came from? It came after the financial crisis. Janet Yellen and Ben Bernanke created it. Well, how did they come up with this number 2%? They just made it up. You got to remember after the financial crisis, remember how long they went telling us inflation, if we could just get to 2%. Remember, GDP was like 1.5, 1.7, and inflation, they were like, inflation's only 1.3%, 1.6%. Yeah. It was like 3.5. But this is what they've done. They don't want you to know how badly they're destroying your wealth. It's, think about even during remember the housing boom? Every day you went to bed, your house was worth another $1,000, $2,000, $3,000 overnight. The house fairy came by. And they were still telling us we didn't have inflation then, Jason. Right? Oh, man. If we just could have some more inflation, it would be great. This is the nonsense that we have to deal with. And I only bring it up because Janet Yellen, who's now the Treasury Secretary, who, when she became Ben Bernanke's assistant, because we already knew she was going to take his job. That's how they do it. And I was warning you then, the old lunch lady, I called her. Because that's what she looks like to me, right? Just throw a hairnet on her and she's the lunch lady. And how scary things would be. She was out, she did an op-ed in the Wall Street Journal yesterday, warning everybody, hey, you better not vote for Donald Trump because the economy will veer off course and inflict significant damage, according to Janet Yellen. She said that there are several signs of life. under the Biden-Harris administration. Turning away from those successes could jeopardize our economic trajectory. While there's more to bring down, now listen to this. It gets better. So I get it, fine. She's a liberal. She's always been a liberal. That's not that shocking. You don't normally hear that from Treasury secretaries. They normally don't openly cheerlead, but okay. Well, there's more to bring down the cost of living. Hey, you brought down what? You haven't brought down any cost of living. All you've done is claim victory that you've slowed the pace of the increase. Americans can feel optimistic about their economic future because according to the Treasury Secretary, I guess she's got different math than everybody else, wages have risen faster than prices. And the typical American can now afford more goods and services than before the pandemic. I didn't know. Jason, I didn't know that. Did you know that? Do you know you can afford more stuff? You can. She said it. Matter of fact, most Americans, we can afford a lot more stuff.
I know that there's a lot of employers, big employers, that are raising wages. So, and I've seen just in the last couple of weeks, you see $20, $22, $25 an hour now is going to be a standard for some companies. That's what she's talking about. But just like gold is a leading indicator, what is a leading indicator of inflation? Raising wages. Joe, we talked about how inflation will be lower the rest of this year and early into next year. And then it's just going to take off. Well, where's all this extra money going to go? That's being put into the pockets of people so they can buy more stuff. It's a vicious cycle. Give them more money, they buy more stuff, the prices go up. Give them more money, the price goes up. They buy more stuff, the price goes up. It's just going to keep on going like that. So she's right. There's a lot of big employers that are raising wages, but that's just an excuse for her to inflate things and enrich her buddies. I mean, that's all there is to it. I mean, inflation does help somebody. It helps rich people. The more assets you have, the more valuable they get. Why do you think we're selling gold and silver? We're trying to put you into the pursuit of being a rich guy, because that's the only pursuit that seems to be taught to kids nowadays as well. Just get rich. Forget life and everything else that's really good about life. Just pursue being rich, because that's the only thing that matters in this inflated cycle that the Fed put us on starting in 1913 when those rich guys put themselves in power, Joe. It's just gotten worse and worse and worse, and it always leads to wars and all kinds of chaos, right, Joe?
Yeah, it's ridiculous. This is how out of touch. And, of course, she's hey, this hasn't happened by accident. She's right about that. It wasn't an accident. They did it on purpose. They absolutely did it on purpose. Yeah, that's the funny part, right? This whole thing was a bunch of nonsense, but then she told you the truth, right? The part that she said, this hasn't happened on accident. Yes, you're right. You're right about that. Make no mistakes about it. This is no accident. And this has been the year of chaos. We've told you it's going to be chaos. We've told you exactly where gold and silver were going to be. We've told you exactly what to expect out of the economy. And I'm telling you right now, 2025 is going to look incredibly different. And I'm sitting there and I'm watching all these people. And I shouldn't say all of them. There's not that many. There's a handful that keep wanting, we need this gold correction. It's got to correct. It's got to correct. And I always read them because I agree. I want a correction. That'd be nice. That'd be a nice little pullback. Gold hasn't let you in all year. But then when you read it, they all say the same thing. Well, it's just because it has to. I mean, look at this run. It's got to. What about? Well, give me some facts. Tell me why. Right? The Fed is cutting rates. They're going to bring inflation back, and gold's not going down in that environment. How about demand? How about that? Maybe that. Okay. There was an article out. One guy said, well, yeah, the demand from Asia, yeah, it's going to fall. Well, who did you talk to? Well, I talked to some guys that sell jewelry. Oh, really? Because guess what India just reported this morning? A record amount of gold imported in what month? Oh, wait. It was last month. When the prices were starting to roar, India breaks a record. $10 billion in the month of August, a 300% increase, saying that the country imported 140 metric tons in a single month. So Jason, again, I don't know. I agree. Yes, gold's been on this huge run. But there really isn't right now this catalyst for any real correction of any means, especially if the Fed's going to keep cutting rates. And the way what I'll call the BRICS and the people that want to be BRICS are buying gold, there's really, I guess there really isn't, right? I mean, this is why we probably see why has gold gone up $700 in a year? Part of it is because, well, it's just getting to where it's supposed to be. But the real thing is, Jason, this is economics 101. It's supply and demand. And right now, the supply of dollars is going to be on steroids, which means gold's going higher. 800-951-0592, Patriot Radio News Hour. Joe and Jason here on this Monday, and man, we got a lot of stuff happening. We're talking about, hey, is there going to be a correction in gold? I mean, listen, it doesn't go up in a straight line. Of course, never does. But could we see, $100, $200? I would love it. It'd be great. I want to see it. But I don't. It's the problem. It's why, what did I just do last week? I told you, okay, guess we got to bump up your gold forecast. Sorry, guys. It's got to be higher than 3,000. I don't want it to be, but it is. Now, all of a sudden, you've got the European Central Bank starting to compare the 1920s to the 2020s. Uh-oh. Is that what is going on? And I wish it was. You know what? I think it's worse than that, actually. And on top of that, remember a while back, we talked about, France had that vote and it didn't go the right way. It wasn't the worst possible outcome. Well, they finally got a new prime minister. And he put this cabinet together, and they've got no hope that it's going to actually work. They're not going to have it. The French budget deficits have blown out. Then this weekend, Speaker Johnson, right, once again folds up like a cheap tent and says, okay, well, how about if we just increase spending at the same level that we've been, and we won't care. Anybody can vote. You don't have to. We don't care. Whatever. Legal, illegal. We don't care. Forget the voting thing. And oh, by the way, we are going to spend some more money on the Secret Service because they need more money. Apparently, because they can't keep anybody safe, and trying to avoid a government shutdown. But Jason, here was the funniest part. They couldn't even go to March. And he said, how about can we do it till December? At least the new Congress will be in. So far, no word out of the Democrats. But, Jason, this is the other thing. The whole Japanese yen story, that's not done, by the way. That's not done. That was just like a shock wave before the big one comes. Germany already says it's in recession. France now is following suit, and they've got the worst deficit in all of the EU. And, they actually have some, rules that you're not allowed to do certain things. And then on top of that, Jason, we've got a Congress that seemingly is unwilling. They won't cut a single dollar out of anything.
No, Joe, they're not going to. They're going to spend more. That's what they're going to increase the budget. There's no cuts. Are you kidding me? they're going to come bake up some emergency and then spend. Right, Joe? That's what's going to happen. You know, I was looking at the rates. You know, the Fed didn't have complete control of the rates in the 20s, right, Joe? They had influence, right? Well, they have that now, and you know, we had a lot of gold customers that get a little worried. They're like, well, I hit that all-time high, and then it just sat there forever, and it went down. That's the one thing. It's like the only blip. It's the only kind of ammunition anybody has about gold is like, well, it was at 1900 in 2011, and it just sucked and sucked. Well, but you got to see what the Fed did. You got to see what the money printing and how they hid what they did because it was so awful. Well, Joe, I think this time it's possible they can't hide the whole thing this time, what's happening.
No. Well, that's the difference.
Well, you look at October of 2015, it was still zero. That's kind of the last month it was zero, the rates, right? And gold was you remember gold and silver kind of hit those lows, Joe? They finally came all the way. I think gold went all the way to like $1,050 or something for just a short time. But then the rates started coming up. And it took actually 3.5 years to get it to where it's high in 2019, 2.5%. You remember all this, Joe, right? Gold was going up during those times. The rates were going up, gold was going up, and then they had all the repo market, and it's like, something's wrong. Overnight loans, right, Joe? And they started knocking the rates way down. Here comes COVID. Gold went up, rates went up, gold went up, rates went down. Gold went up. Now, we did have a couple of years where kind of, after COVID, it kind of stayed around the $2,000 level. Right, Joe? But we had rates at zero, and they took the rates from February 2022 in just 18 months up to 5.5%. Leveled it off, and then gold started going up. Now they're going to drop rates. Gold's just going to go up again. And if it crashes, like how fast the rates went up this time, it went up twice as high, half as long. The rates are going to come back really fast. The inflation is going to come back really fast. The rates are going to blast past 5.5 really fast. Gold's going to go up when the rates are up, down, or stagnant, Joe. And the printing's going to go crazy. What are you kidding me? A 1% decrease in their budget. The government's going to increase their budget, Joe. They have no other option in this situation.
We couldn't even get, I don't even care, $10. Hey, guys, we're going to cut $10 out of every agency. Nope, can't do it. Can't even cut $10, can't cut $100. Forget about 1%. And the problem is very simple. This is an easy math problem. Really easy. Because here's what Jay Powell and these idiots did last week. They said, you know what? We're already here. Why go through the aggravation of everyone getting laid off, losing, not paying their credit cards, not paying their truck payments, start losing their houses, all that stuff, have the economy crash down. Inflation would come back under control. Instead, they said, screw it. Let's just go for it, right? Let's just go for it, and let's get the printing presses cranked up and just let the chips fall where they may. And here's how it's going to fall. It's going to be really simple. The port workers that are getting ready to strike at the end of the week. And, oh, man, you want bad? You think inflation's bad? Those guys actually walk off the job. They're a big problem. Whatever they get, 2 years from now, they're going to be like, wait a minute, we need to strike again.
Yep.
Because we don't have enough. And then we need to strike again and strike again and strike again. Get ready. Everybody better hold on to their hats because gold looks like it's going to the moon. We'll be back after the break. 800-951-0592. It's never going to be enough. It's never going to be enough. And if you think I'm wrong, all right, see what happens. Watch what happens. Watch what's going to happen. The government is out of control. You guys know this. We need less government, not more. And we need it by, we can't even get a 1% cut. We need like a 25% cut across the board. That's what we need. It's not going to happen. Because they know, they said, we screwed up. We screwed up. We thought we had it. We were going to balance the budget. We were going to do all these great things. Okay, we screwed up. I mean, the debt's $35 trillion. I mean, who cares at this point? You better take it really seriously, because I agree. This probably is this century's version of the Roaring '20s. And we know how that one ended up. Today's special, and we're just doing great things here. $20 gold. Liberties or cents, you pick it. We don't care. 1 through 9, $27.75. You're like, but Joe, gold's $26.35. I know. 10 through 19, $27.50. December gold is like $2,660 right now. You buy 20 or more, $27.75. That's not even $100 over the spot price. It's absolute insanity. And guess what? Gold's probably going to be over that before you get to Christmas, the way things are going right now. 800-951-0592. The best premium. I've been doing this for 21, almost 22 years. These are the best premiums I've ever seen, Jason, ever. And a lot of it because it makes sense, right? Gold's going up so fast. Hey, they can afford to sell it at a lower premium right now until the selling stops. All of a sudden, Jason, you've got this brief moments. We don't know how long it will last. Remember when two $10 Liberties were cheaper than the 20? Remember, it went like a whole year. Dude, it's not even close right now. $10 Liberties got so expensive so fast. The 20s are where it's at right now. 1 through 9, $27.75. 10 or more, $27.50. 20 or more, $2,725. And right now, gold's up $10, $2,632. So, great opportunity across all levels today. Again, 800-951-0592. And then Thursday, I think, Jason, Thursday will be the big day, right? What does inflation look like? I'm anticipating another low number, and a lot of people, I think, are going to be pretty happy with it and saying, oh, look, the Fed can cut another 50 points if they want to.
I think they're going to. I think it's already been planned out, Joe. I think, as I told you, how fast it took 3.5 years to get it to 2.5%. The last time they raised the rates, and then they came down for 2019, 2020. It went up twice as fast in half the time, and now it's going to come down twice as fast in half the time, and then it's going to go back up. What's it going to go up to then, Joe? So yeah, it's going to be chaotic. It's going to be very chaotic, and there's going to be something. Oh, we got to blame this war. We got to blame this virus or whatever it's going to be, and that'll be the cover story for the economic chaos that they built into the system, Joe. That they're enriching themselves and their buddies. That's just really all it comes down to. When you know where it's going, you can play the game. Let's just face it, Joe. If you know where the dice is going to hit on the game of Monopoly, you're going to win the game, right?
Right? Right. I was thinking you're going to say the craps table, right? Hey, if you know what the dice are going to be on the craps table, right, you're going to be a winner. And
right.
Listen, we know what the dice are going to be. We know. They told us last week. They told us. We're going to print money, and we're going to print a lot of it. And then the government, these clowns, oh, yeah, well, we're just going to keep spending until we get some more people in here, and then we'll figure out how to spend even more money, because that's really what they want.
I think people in that world believe that it's just numbers. It's just an idea, which it is. There is a fakeness to the whole thing, but there is a physical world, and at some point the physical world doesn't agree with their funny money, Joe. It just doesn't, all their numbers, right? And then when that happens, that's when you have the bus cycle, the boom and bust. The bus cycle is when the reality of the real world meshes with their fake numbers, right, Joe? And that's where we're headed right now. That's where we're headed.
It's unbelievable that you have the Treasury Secretary write an op-ed in the Wall Street Journal yesterday telling you how much better off, how much more stuff you can afford now. Right? I mean,
yeah.
Really? Have you seen inflation in the 3 years is up 20%, but somehow we can afford more stuff? Housing sales are the worst they've been. Look at new car sales. They suck. Why? Because nobody can afford them. But yet she's out there telling you, oh, no, you can afford a lot more stuff. Just go to the grocery store. Hey, we're going to do the Whole Foods thing. We're just going to we're going to make smaller grocery bags. That way you'll feel better about when you drop a couple $100, and at least now you'll have a couple of bags worth of stuff. Patriot Radio News Hour, final segment when we get back. Final segment here on this Monday. Could we see $2,700 gold by Friday? We could. Depend. I think it'll depend on Thursday. And then, of course, Friday, we'll get the producer side, but we'll get the inflation data Thursday and Friday. Right now, $20 gold, Libs or Saints, mixed match, do what you want. 1 through 9, $27.75. 10 or more, $27.50. 20 or more, $27.25. 50 or more, you know what? I just thought of it. 50 or more, $26.95. How about that? 50 or more, $60 over, 800. 951-0592 as gold is at another record high. And I'm going to tell you this. This is the other thing. We'll watch France. That's going to be another important issue as we look at whether it's the yen, the Eurozone here, China. Get ready. I think China's going to unleash another massive wave of spending to help their economy. Jason, this is it. They've decided to throw in the towel and just say, let's just keep printing the money, which means gold goes higher.
Yeah, gold under most scenarios is going to be going up. Joe, the only way that gold can go down is if the spending did slow down or stop, and they started taking money out of the system. They need to take money out. The taper tantrum, remember that? The so-called taking money out of the system, the balanced budget. You're not hearing any of this. Those are the kinds of things that slow the money. And then, yeah, right? Those are the things that make gold stay down. But you're not even hearing this stuff. No one's even speaking it out loud, Joe.
Yeah, and it's funny. I guess my camera became unplugged here. I'll get it plugged back in. It's something where they've lost all interest, haven't they, in doing anything that remotely resembles any type of fiscal responsibility. The Fed has given up on it. The government has given up on it, and the rest of the world's given up on it. I mean, right? I mean, we knew this. Look at Japan and what they were doing for all of that time. And then you get these warnings, and somehow, listen, I think the Dow's doing the right thing. Wall Street should rally at least until the bubble pumping kind of comes to an end, and then it gets really ugly. That's the fear. is when they come back and say, uh-oh, inflation's a problem again, then all of a sudden you got a problem.
Then you have a problem. But we'll watch it, Joe. We could see assets going up, but the funny thing is when assets are going down, gold goes down less. And when sometimes when the market's going down, gold's going up. Gold is on its strongest length of time that we've seen. And if this rate hike cycle is a long-term thing, 10 years, 20 years of hiking the rates up, gold will have a super cycle. Yeah, everyone will be like, everyone's going to say, I wish I would have bought gold before COVID. That's what everyone will say. I wish I would have bought gold before COVID. Well, this is the next best thing. This is the gold prices right after COVID. Because the next period of the good old days, Joe, what is that going to be a couple of years from now? Gold at 4,000. Maybe it cools off for a little while at 4,000. But I don't see. Look at what gold's doing: $5, $10, $5, $20. It just keeps. I mean, we should be really happy, Joe, because how many years did you have to say gold's at its yearly high, right? Because of that 1900 spike. Every day we get to say all-time high, all-time high, all-time high. You guys better start listening. All-time high. Gold is not expensive right now, Joe.
800-951-0592. Jason and I are coming right back with the Half Empty Cup.